You are watching Market Watch, the brief overview of the key events from the world of finance. Today we will talk about the precious metals market and gold in particular. This is an extremely amazing financial instrument, because demand for it can increase both at the time of the increase in the Fed's key interest rate and at its decrease. Also, the demand for gold will grow in the event of an increase in geopolitical conflicts and instability of the economic situation. At the moment, it may seem that the price of gold is always rising, but of course this is not the case. Precious metal quotes are declining during a period of stability and investor confidence in the stability of the global economy. Let's figure out why the prospect of lowering the Fed's key interest rate is a bullish fundamental factor for gold. Firstly, a reduction in the interest rate will immediately lead to a decrease in the yield of U.S. government bonds, thereby increasing the investment attractiveness of the yellow metal. Secondly, the easing of the Fed's monetary policy will indicate a slowdown in the world's largest economy, which in turn will increase the risk of a recession. This is an extremely negative fundamental factor for the stock market, and at the same time bullish for gold. Goldman Sachs analysts have revised their own forecast for the average gold price from $2,090 to $2,180. They expect to reach the $2030 mark by the end of this year, but consolidation may occur in the short term. The formation of a sidewall is possible in the absence of a significant deterioration in the geopolitical situation in the world. According to analysts, the key driver of growth will be the Fed's decision to lower the key interest rate. Therefore, we can expect growth only by the end of the year. At the same time, the activity of buyers can significantly increase in the event of high-profile bankruptcies, as it was in the first half of 2023, with two large banks in the United States. And in conclusion, let's talk about digital gold, which is no less popular. Bitcoin returned above the $70,000 mark, indicating the stability of the bullish trend. Nevertheless, significant sales on the stock market can weaken the activity of buyers. Therefore, it is important to monitor not only the change in demand for Bitcoin ETFs, but also the general mood in the financial markets. At the same time, a moderate cooling of the market may contribute to an increase in demand for Bitcoin, which can also serve as a protective asset. But it is unlikely that the demand for Bitcoin will remain stable in the event of a collapse of key US stock indexes. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.